Welcome to Canadian Dividend Stock Channel. Today I'm going to talk about two top Canadian dividend ETFs for 2022 to buy, and so you can buy all these stocks in Simple Trade and Quest Trade brokerage. So you can open an account using the referral number given in the description, and you can buy them in the Simple without any commission. So let's go ahead and see what's in our list today. So the very first stock I'm going to talk about is BMO Canadian dividend ETFs. Stocks with a stable business and cash flow are a good bet if you want to make money without having to do any work at all. Some good dividend paying stocks comes from industries like banking, utilities, real estate, telecom, oil, and other things that pay lots of money. There are risks in this field as well, though the pandemic cut into the cash flow of oil and real estate stocks in 2020. So they fall and cut the dividends, but due to the inflation, those stocks are growing nowadays. So if you want to invest in one stock, so there is definitely lots of risk in that, but if you want to avoid that risk, you can choose BMO Canadian dividend ETFs, which gives you exposure to 51 dividend stock from a wide range of industries, including energy and communication. It has put more than 5.5% of its. It hasn't put more than 5.5% of its money into one stocks. At the time of this video, the MER was 3.39%. The annual rate distribution yield was 3.74%. But the diversification come with a lower annual rate distribution, yet yield of 3.74% and a higher MER. People who invest in groups have lot less risk than people who invest in a single stock. So based on that, this stock 5-year growth is 20%, whereas that's not very good, given that TSX composite index rose 36%. So these ETFs trade capital gains for an annual dividend and less risk. So you can try this one, because the asset under management for this stock is 917.03 million, which is huge and has stability in these stocks. Going to the next one, we are going to talk about iShare S&P TSX cap index ETFs, index which normally talk about information and technology in a based stocks there. So the ticker symbol for this stock is XIT. So Blackshare has been selling this stock since March 19, 2001. It is a low cost index fund that BlackRock has been selling since then. It is one of the BlackRock's oldest fund that gives investor a chance to invest in a group of Canadian IT stocks. Usually ETFs gives investor a mix of both fixed income and equity securities to buy and sell. However, iShare XIT is mostly made up of stocks from S&P TSX capped information technology index. The index focuses mostly on stocks with no fixed income assets in it. The BlackRock iShare cap information technology index ETFs mostly invest in different parts of Canadian tech industries. In total, top 10 holdings makes up to 98% of its investment portfolio. The rest of the fund assets are in cash and or like derivatives. So XIT keep changing its holding to match the S&P TSX caps information technology index. It has been very interested in Canadian stocks like Shopify, Constellation Software, and CGI. In Shopify used to make a bigger parts of ETFs fund under management, but it has been rebalanced recently by the fund manager to make sure that the top 10 equity stocks are not all the same. In terms of ETFs, the XIT management expense ratio is not one of the lowest you can find today. This ETF has a management expense ratio of 0.61%, which make it a little pricey to think about. Even so, the MER is still a lot less than what you can expect from mutual funds products. Average fees of mutual fund is more than 2%. In the last few years, a lot of Canadian has been choosing ETFs over mutual fund, which is why you can see this. The asset under management for these stocks is 497.42 million as of now, and the dividend yield is minimal, which is 0.03, like none. So this is also one of the good choice. So finally, thank you so much for watching the video, and don't forget to subscribe to the channel. Thank you.